to live trade. And let's see what happens. Let's see if we find something. It's we're winding down to our last couple of days of everybody able to come. You'll need a password starting on Monday. But in the meantime, let's see what happens here. Obviously 1, 2, 3, 4, these 4 we don't even really look at for another 15 minutes or so. And as we wait for, kind of missed one probably in the euro currency. We weren't here yet, but again, it doesn't matter. This is the key point of this is very simple. Okay, we're not going to get every trade. I mean, that's not what we do. We're not worried about every trade. We are going to continue to wait for our opportunity. Okay, and if we're watching and it happens, we're going to take it. That's all. Pretty simple. Okay, you're never going to get every trade no matter what. Okay, so stop worrying about every single trade and just let the market do what it does. And if it does what you want when you're watching it, it follows what we need, then you make the trade. It's that simple. Okay, this is worrying about trades you might have missed. You know how many opportunities there are in a year? Okay, in an average year, that whether it's mediocre or it's good, probably 5,000. Okay, I mean, but that's if you're watching every minute of every day. Okay, we don't do that. We're not interested in that. So we can only trade and operate and execute when we're here. Okay, so like I said, there's always the trade you missed. You don't worry about how good you traded. You always worry about the trade that was there that you didn't get. Okay, well, that's silly. Okay, because you're not going to get them all anyways. So don't drive yourself insane trying to figure out what you missed, and take what you can, but follow the rules of trade, follow what we do, and then you'll have nothing to worry about. It will be successful. It will make money. Okay, you won't make money in every day in every trade. We know there's some landmines out there waiting for us always. Fortunately, on this call, we haven't had them, but we've had a couple, but we're hitting way too high of a percentage. But it'll revert to mean eventually. But we'll take what we can get. Okay, as we're looking, I'm not going to trade gold, but gold is forming potentially. Again, you can see right now, there will be only one potential trade as it looks at the moment in the next 3 minutes or 2 minutes, which would be potentially in gold. Now, I don't trade gold during the day, because I got too many other trades I'm watching, and it's too much of an execution issue for me to have to go, back and forth. But that's just one trade. Okay. Now, certainly I trade it when I'm on my own, but again, I don't have to explain and teach at the same time. So I'm not concerned about going through all the trials and tribulations I have to go through to get there. Okay. But, we can't worry about every minor little detail or every little trade we may miss, because we're going to miss a lot of trades. Okay. The key is not to put yourself in a position to get beat up because you thought you missed one. So now you're chasing substandard or subpar trades. Okay. We're not interested in chasing subpar or substandard trades. Okay. That is that simple. So please don't fret over the trade you might not have seen. All right. Because there's a gazillion that you're going to miss. All right? So anyways, so as it turns out, there will be no trades at this change. Okay. None, not even a whimper or a whisker or a thought. Okay. So on to the next. Okay. So now we wait and we watch, and again, we sit here and you know, everything is your time frame. You know, I use 4 minutes. Okay. People ask, why do I use 4? First of all, everybody uses 5. So I don't want to be with everybody else. Okay. I will always use oddball time frames. Okay. Because I don't want to be with the crowd. I want to be on the other side of the crowd. Okay. So that's just me. Okay. It doesn't mean it's right or it's wrong, but I will use odd time frames always because our models are faster and don't need those stupid indicators that others use. And I can be ahead of the crowd knowing that they're probably going to make the same trade in a minute past me. So, but anyways, so we're watching and you can see that it's going to be quiet. I mean, this is, again, this has been more the theme of where we've been. And you know, again, the theme, I don't know that it's changing anytime soon. Okay. You know, unfortunately, they don't ring a bell and the markets don't make an announcement that they're suddenly going to get busy. Okay. So all we can do is watch, observe, and be prepared. Okay. For a trade. And if you try to push that faster, where do you end up in? I'll let you answer that. Okay. It's our job to react to exactly what we're looking for and nothing else. Okay. That is, we have one job, the loony bin. Yeah, I'm already there. We have one job. Okay. Look for the one pattern that we're waiting for. Okay. Understand it, know how to execute it, and be prepared for it. That is our one assignment, Mr. Phelps, if you're prepared to accept it. Okay. So right now, nothing. Maybe gold again is going to get a chance, probably not. Potentially the bond market, but there's not a price movement. Okay. All right. Well, I'll sit back. I'll relax. Listen, I know one thing. Okay. From playing poker, from trading for 44 years, if I rush it or try to force it, I'm going to lose. Okay. And if I continue to try to develop bad habits, I'm going to lose more. So, at the end of the day, I tell you this because it just makes sense, okay, to be patient. Again, it's the percentage and the winners. Other than that, man, the market, of course, we're just crawling because we're still in that period of time that the markets are not ready to move. So you're going to have something potentially in the bond market if you want to make it. And again, I don't necessarily recommend that for everybody. You're going to have a potential in gold. Okay. So for those who want to trade gold or the bonds, you've got potential. And I'm not telling you to trade them. Okay. I trade them as a rule, but I'm going to lay them out and I give you the trades and I give you the stops. That is up to you to trade them if you want. The bonds look too thin to me. Okay, I would stay away from the bond market right now. It's just too damn thin. Okay, but as far as gold, certainly it's a reasonable trade. Okay, and so just happened. Okay, I gotta see what the hell's going on here. Anyways, so we got to wait for what? We're waiting for a green bar in gold. It's still going down. Okay, all right. So if we use a $3 or $300 risk on gold. Okay, so right now, the stop, if we get in now before it makes a new low, would be 1789.60. 1789.60. Okay, now this is not an entry, it's a flat. Okay, so we're still waiting, but still the stop is the same, 17 excuse me, 89.60. Okay. We know that. We know what we're waiting for. And now what's going to happen is if it pops, which it could, hey, it's going to happen. Okay. But if it pops, what are we going to do? Well, we're going to have to make a decision. Is it worth the amount of risk? And, I don't like $500 risk levels. Okay. That is worth, again, there will be a time when I will like them, but this is not that time. Okay. In very thin, illiquid markets, Jesus, was the whole Epler clan here? Man, you got logins everywhere. I'm not interested in extra risk. So this is a $500 trade if you want to make it. Okay. 1794 approximately. Okay. You can make it. Look, I'm not telling you not to make it. I'm telling you, I'm not taking the risk. Okay. That's what I'm telling. That's me. Okay? To me, in a market that is like this, and believe me, I've taken much bigger risk than 500 on trades. Okay. On one contract. Okay. I typically trade more, but I've taken much bigger risk, but I don't like $500 risk in a market that's about as thin as a tissue. Okay. And certainly it'd almost be stopped out already. Okay. And again, it doesn't make it right. I'm just, again, you want to weigh everything together. Okay. The amount of risk you're taking, the type of market we're playing in. Okay. These are the things that we talk about in class, right? These are the things that we teach. So if you took it, you'd already be out. All right, there you go. Now, again, this is not an I told you so. This is, hey, you look what you got. You got a blow off too. Now you get another opportunity. Now this one may be better. Okay. But the issue comes very simple. Okay. There is no reason to expose yourself in markets that are telling you, stay the hell out for now. That's what they're telling us. Okay. And unless they give me exactly what I want, we got to be the baby, right? We got to have a tantrum and get exactly what we want. That's why we don't take extra risk here. That isn't why we don't gamble at this time. This is why we're more passive than aggressive. And there's a time we're going to rotate over to be aggressive. But how can you be aggressive into a market that's got no business? Where do you find the edge? That's the question you have to ask you. So you've got another blow off in gold. So we'll look at it again. If you took the first one, or if you didn't, maybe you want to take this one. Okay. So right now, if there was going to be an entry in gold, the stop would now be 85.50. Okay. 85.30 and going down. Okay. 85.30, 85.50 and going lower. Okay, but again, I'm giving you the best training I can give you. Okay, and the first part always comes down to what? Your mind. Okay, where's Strother Martin and Paul Newman? Get your mind right. Okay, Luke, we got to get your mind right. Okay, excuse me. Okay, so let's go back to the 4 real quick while we're waiting for, hopefully, we're not taking a trade in gold now anyways on the 1. Okay, I ain't taking that anyways, maybe now. Okay, so now the stop has got to be what? 80. I'm not taking that trade anyway. I don't, they can jump off of a building. I ain't taking that trade. Okay, the bonds were certainly a potential. Okay, but again, pretty thin, so I'm not really all that hepped up. So let's just see if there's anything in these markets. And right now, no. All right. So what we're going to want to see, I want to see volume minimum up to here. Minimum, not maybe, minimum. All right. Minimum to here. Minimum to here. Get away from there. Minimum to here. Okay. And that's, if I don't see that, those aren't even, I won't even look. I won't even look past it. Okay. Because again, I can wait. I'm a patient guy. I don't have to be rushing to lose money. Okay. I would rather you trade 2 contracts and be patient than trade 1 and be aggressive. Okay. So please don't put yourself in a bad position where you basically can only lose. Okay. Because really you are defying everything that we stand for as a trader. Okay. You're defying every rule and everything that I would ever talk about. How's the back, young man? Cap, how you doing? How's the back today? I know it sucks. Listen, I got one, so I know all about it. But you know, this is the point of waiting your turn. Okay. Waiting for your opportunity. Look at, there's another blow off in gold. Now, one of these is going to pay off. Okay. But again, you have to weigh the amount of risk and the amount of exposure for yourself, because you're going to find that taking gigantic risk, and $500 in this market is gigantic risk in my views, okay, is not going to pay for itself. Okay. So right now, all right, time wise, we got nothing, excuse me, nothing from nothing. There is no trade. Again, gold again for the 3rd consecutive potential bar. Okay. But other than that, you got nothing from nothing. Okay. So we don't trade. You sit back and you wait. Now, this is the big question you're always going to have to ask yourself. Okay. Do I have the ability to be patient? Do I have the ability to sit back and wait? Do I have the ability to not get involved, okay, where I don't belong? Okay. Now, again, do you think that's an easy answer? You know it's not easy, because we all know how easy it is to push buttons. Okay. So this is your biggest trading test. Okay. When you're trying to day trade, and you are trying to day trade correctly, is the ability to wait. The ability to say, okay, I have the guts and the patience to wait for my trade to come. Okay. There you go. If you don't have the ability to wait, you'll lose. That is a very, very profound, but factual. Okay. Again, it's not, look, trust me, nobody wants to trade more than I do. I need the money. You know, I got a house and a pool to pay for. I got 2 houses and 1 pool. Okay. So, you know, now, if you looked at the gold trade, okay, and again, this is still the same stop, which was what, 1780, and you could have entered at 85 or 86. I don't know. To me, I'm not taking that much risk. I don't care if it would have made a fortune. I'm not interested in that much exposure. Okay. You know, this is not a market to expose yourself. Okay. You get arrested for that in some states. We are still trading September. Yes, as I said yesterday, I will let you know. Okay. You never have to worry about the wrong contract with me. Okay. I will tell you when it's time to change. And as I said yesterday, and I will repeat it one more time today, we don't have to roll over until a week from Friday if we don't want to. Official rollover starts tomorrow on Thursday. Okay. But the volume will still be in September until at least Monday or Tuesday. Okay. And there is no benefit. Remember, you are trading a future that is the same. It is the only difference is the time and the interest rate that has changed. The product itself is exactly the same, and there is no worry of delivery or any of the other stuff that goes with it. I'm on top of it. When it is time to roll, you will know. Okay. When we move, I will tell you you'll have no question of what we're trading, what contract we're going to trade. Okay. So don't worry. I believe me, I've got a lot more risk than anybody here. So I will be in the right contract. I promise. So, this is again, hold on a second. I'm sorry. I just had other things come up, as you can imagine, at this time of day. Okay. So where am I? Where am I? I'm lost. I'm lost in space. Okay. So in the meantime, look at that. As usual, as every other day, we have seen a dramatic fall off in volume. And of course, we will adjust as it comes. Interestingly enough, we're not getting any action in some of the markets we typically do, which is either gold. Now, gold, I mean oil. Now I know I have I know. Does anybody know why we're not getting much in crude? I am using I'm trading October crude. I don't know what contracts up here, but I'm trading October. I don't even think September's on the board anymore. Okay. To be honest with you, I don't. I'm trading October crude. I don't. September isn't even on the board. Okay, that's been off for a long time. Okay. I don't know if this is what chart this is, but because I don't understand all these charts yet. But 69.40. This is October. This is the October crude chart. I don't know what you're talking about. Okay. There is no September anymore. It's been gone for weeks. Okay. It's not stupid. I mean, but there is no September crude. It's not even on the board. It's been gone for, I believe, for a couple of weeks. Yeah. There's only October or later. There is no, I'm using December gold, right? There is no October gold. October gold, and what, right? Because they are December right now. Those are the front months. Okay. I wasn't asked about that. Let's not lose our minds here as the contracts. Okay. We all know what contracts are front. If you don't know, you better learn what the front month is and everything that you trade. Okay. Front is October in crude, still September in the equities and currencies, December in bonds and notes. Okay. Those you should all know. Okay. Those are in all the portfolios. We only trade the front months in the financial products. Okay. So these are not, this is, but the patterns themselves, if it's a financial product that is not affected by delivery, we'll all trade exactly the same regardless. Okay. They don't trade differently because of the month that they're in. So it doesn't matter what chart I'm watching. Okay. They're going to trade the same because of the same product. The only adjustment is the interest rate that makes bonds, for example, September bonds are about 164 probably versus September down to almost 164 versus the 162 we're trading because of the interest rate loss it takes over the next 3 months. Okay. But the pattern itself is going to trade exactly the same way. Okay. So again, every contract I have, my contracts up here are all correct. Okay. Everything I have here is correct. Okay. So don't make, I'm already nuts. Don't make me nuttier. Okay. I'm a stone's throw from an asylum. Don't push me in. Okay. So obviously no volumes, maybe something, nothing here. There's nothing at the moment. Okay. All right. So What do I have to do? I wait. That's what we do. We wait. I was going to answer something on crude before I got thrown out of whack. Oh, why is crude slow right now? Oh, wait, say it's not anyway. It doesn't matter. I'm wrong. Okay. Because the number doesn't come out today at 10:30. It comes out tomorrow because Monday's a holiday. But usually on Wednesday at 10:30, there's a crude number, which sometimes slows down the pace of the market, the EIA number. Okay, but that's coming out tomorrow now because it was a holiday on Monday. Okay. So in the meantime, back to business. Okay, there's nothing going on. Okay, well, should we force a trade and make something happen and wish and hope, or should we do nothing and wait? Okay, what do we think? That's a question that requires an answer. Okay. I mean, should I jump in and try to guess? Okay. Or should I wait for my opportunity? I mean, I could, I could fire all day long. We could fire 23 and a half hours a day if we want. But where's the logic and education in that? That's like pissing in the wind, as they say. Okay. I mean, not a very good strategy. So we'll watch. Now, suddenly, maybe I will say there'll be an even money chance that we're going to get a blow off right here in the Russell, the Dow. I mean, the S&P. Not so much the Dow right now, but we'll see. And that's about it for right now. It looks like the S&P and the Russell have an opportunity to get there. Now, it will require two things. One, price has to continue to rise or stabilize up higher, and volume has to continue behind it. Okay. Those are the two things that I see them coming. Okay. So as we get closer and we can more identify that they will be coming, we will start to organize ourselves and start looking at where will the stop be? Where will we have to be? What are we going to do? Okay. Now, suddenly already, of course, the Russell has already lost its ground, all of it. Okay, look at that. Now, it doesn't mean it won't go back up there, but it has lost all of its ground, as has the S&P. So now the question is, are they going to reverse here, or can we get a chance to be a potential buyer? Okay. So as the volume approaches the right area, remember, this trade takes two components: price that is correct. Okay. The adjustments we will make in volume as the day wears on will change. Okay. So you got close to the volume we would like in the S&P, but no trade. There's no price. So we only have one component. Okay. The same goes for the Russell. We only have one component, so they become non-tradable. The blow-off changes and the volume changes, which we cover in class during the day. Okay. Again, this is all part of the training. I can't do everything at one time. Okay. I can't give you 44 years in a 30-minute span when I'm live trading. Okay. But the markets change all day long. So later in the day, we will make adjustments just like we already did on volume. And now I'd make another adjustment on where I want my volumes to be based on where we are now. Okay. Again, as the day wears on, because the pattern itself is a blow off, but it requires different amounts, and it's really based on the last hour or so of what the trade has been. Okay. But, we trade around this time of day because we know that the opportunity is much greater early. Okay. So for teaching, now we used to do this and get about the same amount of trades at 2:00 Eastern every day. But, right now you're looking at a market that is nothing to begin with. Okay. Think about it. There is nothing going on either way right now. Okay. So should we be trading right now, actively? The answer is no. There's nothing going on. Okay. I mean, that again, you have to put yourself in a position to understand, okay, what you are trying to accomplish and what the market is offering. And right now, the market is offering nothing. So should I be aggressive? No. But as the day wears on, volumes will adjust. Okay. Because the market, it's always going to be busier. The initial move off the open is always looks like a blow off, but it's not, which is why for the indexes that open at 9:30, okay, we wait till 9:48 to see what's going on, because we know that immediately it looks like a blow off, even though it's not. And the reason that we can trade gold and the others earlier, because their official open was an hour ago. So we're already open when we get there with those markets. So there's a difference. Okay. So here you could call this a bad break, right? See, if it would have stayed up, we would have been short and it'd be going in our favor. But you know what? That's life in the big city. Okay. So the bonds, potentially are seeing some action. And again, I'm not a big fan of the bonds at this particular time. It's very thin. Euro currency is going to be, this will be a blow off. You're going to have a shot here, most likely. And again, I need price. Where it's at, it's not. The volume is there, but there's no price movement. It's flat. Okay. So we need it to go up. It's either got to come way down or go up. But wait, it's got to come back down to under 1812 overture. Otherwise, it's just in the middle of nowhere. It isn't truly a blow off. The volume is there. Okay. But we didn't get it. Okay. So we did get the volume. Okay. It's cool. It's cool. So nat gas over, no shit. Wow. 490 in whatever month that is. Wow. Hey, it must be some hurricanes or some cold weather happening somewhere. Okay. Tie that with an idiotic energy policy, and what do you get? A ridiculous pricing. $5.50 for gas in California. What a joke. Listen, Chicago, I heard it was $3.40. What a joke that is. Why would I want to pay $1.90 when I could pay $3.40? So I can, this administration can have their moronic energy policy. This is criminal. It's criminal, I tell you. I need a wind-driven car. So I'm a windbag myself. I got enough wind I can push the car, but I don't drive anywhere. That's the beauty. Okay. Fortunately, I got a long drive. I got a long commute to the office. But by the time I walk downstairs and get coffee and come back to my office, it might be 42 seconds. Okay. I got a long commute and a very expensive one too. Anyways, this is a big zip. And again, look, as much as I'd like to trade and as much as I'd love to be active, I have to ask you, what's the point? Okay, where's our edge? We got none. So does it make sense to try to get in and involved? No. We'll stick around one or two more bars. I mean, look, I'm not going to waste your time when there's nothing happening. I mean, and the prospects of being, but I hope that you're really learning the lesson that, I don't have to trade every minute of every day. I don't have to be active because we get paid. We've made a lot of money. Okay. For the time that we have traded together, we've made a ton of dough. We don't make it every day. We've had losing days, but overall, we've made a lot of money. But the money comes from being patient and not stuck being miserable because you made bad trades. Okay. I mean, again, remember, if you put the whole game together from the mental side to the actual activation side, you find yourself, easy to screw up and easy to get in trouble. And typically those who get in trouble, what does that mean? It means they're a favorite to make another bad trade right after it. Enjoyed watching paint dry. I don't blame you. I like to head out too. Trust me. I know it's 277 in Wisconsin. In Lake County, which I only live 20 miles from Wisconsin. It's cheaper too, but the city. But my daughter flew here from California because it was the same price to fly as it was to drive. Okay, this is getting ridiculous. But again, this is the morons that we deal with. These are the morons that gave all the power to OPEC. Think about it. Forget about what side of the aisle you sit on. Forget about anything but money. Okay. That's what it comes down to. It's about money. And they're stealing it and we ain't getting it. And we're paying the bill for a stupid energy policy. Okay. God forbid we should pump our own oil. God forbid we should produce our own. Okay. I don't know. Anyways, I don't want to aggravate myself today. I'm already aggravated. I don't need any more. Okay. Anyways, this is a zip. All right. You know what? You know what the nice thing about a zip is? We didn't lose any money either. We didn't do nothing. We sat here. We talked. I raised my voice a couple of times. Other than that, we did a big nothing. Okay. Natural gas is very thin. Look, it's tradable in certain times. Okay. I will not trade it here because it is way too exposed for many. Okay. I do trade it occasionally. Okay. But it has to be nuts. And I will trade. I'll trade. In closing, I will trade any market that is busy. Okay. I don't discriminate. If they're blowing off, I'll trade anywhere. I'll trade any market anytime. Okay. But when I'm teaching, I'm not interested in bringing you into products that are wild and woolly, and you might have to take some heavy pressure. I traded natural gas. I'll tell you exactly when I traded the big, when the optionsellers.com blew up a couple of years ago. Who knows? Maybe it was 5. Who knows? Whatever it was. Whenever it was, I traded it gigantic, and I had swings of 10,000. Okay, before I made money. But I'm not putting you guys in that position. That's ridiculous. That's not what I want to do, and that's not how I want to teach you. Okay, but I do. Okay, I do trade it when it again. I'll trade any market. Okay, that's the bottom line. I will trade any market when it is tradable. Okay, that is the point. But if it's not tradable, there is no market. Okay. As I've said many times before, I'll trade cockroaches if there's a liquid market for it. Okay. Give me a market that's liquid and I'll trade it. But these are right now just pathetic. Look at this. Again, all you do is look there. Look at the volume. Okay. And if the fall or decline, the continued decline of volume. Now we would adjust later, and we'll talk about that tonight in class for those who are coming. So unfortunately, I don't have much to say. I will bid you all adieu, okay, and tell you to have on natural gas. What do you recommend? I don't recommend trading it. That's what I recommend. You're not prepared and good enough to trade it yet. Okay, that's what I recommend. Staying out. Okay, it's a very wild and product that doesn't have all the greatest liquidity. So unless you're a really good professional trader, stay out of nat gas. Okay. It's that simple. Do not, please don't get yourself in a position that you're not going to be able to get out of. Okay. That's what it comes down to. Okay. So please don't go into markets that you're going to have trouble with, and you're going to lose your ass, and you're going to cry that you lost. There'll be times, look, at the markets are going to be open forever. We will have plenty of time to trade any one of them. Okay. But let's be patient and learn so that you understand first. Okay. All right, kids. Have a great day. Sorry we had nothing, but I could say, hey, we didn't lose any money either. So it's all good. Have a great day, everybody. We'll see you later.